Hey guys, today is Tuesday, September 29, 2020. Let's take a look at the market. It seems that the market is going away from this general trajectory because this general trajectory right here, this band, I think we have broken out of it. The reason is the slope is just too fast, right? If we just follow this particular slope, you can see that by April 2021, which is April next year, we're gonna be at 17,000, right? And by 2022 December, 2021 December, so end of next year, we're at 24,000. That just a little bit, not a little bit. I mean, it's pretty far fetched, right? 24,000 from 6,900. So we're talking about 2 years of 4 times gain on the index. Sorry, 3.5 times gain on the index if we follow this slope, which I think is unlikely. So the market is going to slow down, and I think we are just slowing down. So right now, remember I talked about a scenario where the market will keep rolling over, that we end up something like this. Sorry, something like this right here, a 23% retracement. It hasn't happened yet. Right now, we bounced off pretty hard again, and this looks to me that we still have a potential to turn around and making another lower low, right? Because we could be right here, we could be right here. This scenario could be possible, right? We still have a lower low here. We got to keep that in mind. We still have a lower low, so the market could still turn lower and shake a lot of people out, just like this in December 2018. That's something we had to watch out for. But in my opinion, the history doesn't really repeat that quick. So think about everyone looking at the market right now. They can see this pattern that just happened really recently in 2018 November. So there are people who are expecting something like this to happen. If that's the case, I don't think this pattern is going to repeat. I think it could be that we are simply bouncing back like this, and we're going to be continue to kind of hover around and continue to move to the upside. And if we look at other time frame, it looks to me that that is definitely a possibility. We just stabilize and continue move to the upside. I still think that we are going to hit all-time high at the election by November, mid-November. We're gonna hit all-time high, and right now I am definitely bullish, and I'm not bearish on this market right now. Okay. So let's take a look at the leading stocks in this market. Tesla, Zoom, all these leading stocks have been kind of consolidated a little bit, and they haven't really moved in the last couple of days. And I don't think we are going to move. I think we're going to consolidate here and probably move to a much higher position until the end of the year. Usually these kind of trend can last for a year or sometimes even 2 years, right? So let's take a look at the history of this kind of moves. The dot-com bubble, this kind of strong moves for a particular stop from $6 to $100, almost 20 times. We had for example, Amazon had a retraction of $12 to $100. You can see this thing from September 1998 to January 1999. So this was to April 1999. So this is almost a half a year, more than half a year move. So by the same account, we might actually, just by looking at these kind of strong moves, we might have a huge retracement in some of the stocks, right? That we're holding. Even during dot-com bubble, you can see the Amazon only went up from $12 to the peak of $108, and for stocks like Tesla, I think it's following some similar trajectories, right? So we're talking about we're here, it looks to me that we're somewhere here right now. So that is something we need to be cautious. And if this is a kind of following a similar pattern, but in my opinion, it doesn't look to me that we are going to break down. We might have another further upside to go to, but we are definitely not. Right now, the risk reward in these stocks are just not there to me, not there for me. So you can see that this is 800% move. So Tesla could go for a 800% move. That's gonna put Tesla at $659. So we'll see how this goes. I think this particular move right now is not over. And when it's over for Tesla, is usually over for the entire market. Okay, that's usually not a good sign. Okay, let's take a look at the cryptocurrency right now. Cryptocurrency really hasn't done much besides it made a kind of double bottom here. I think we are going to, let me just get rid of all these crap. And I think we are definitely going to dip down below and probably going to continue to move higher. The reason is I think the market right now is just really stabilized in the cryptocurrency, and the on-chain activity hasn't really gone down, right? The Ethereum networks right now, the transaction cost is still pretty high, and the DeFi is still going on, it's still growing every day. So I'm not too worried about the price of Ethereum anymore, given this price action. I think that eventually, even if we fall to the 200 level, it's not really much of a retracement from, I added here, right? I added at these levels. And so even if we go down, we are talking about 20% downside. That's really not a lot in terms of how the volatility, general volatility of Ethereum. So I wouldn't really sell off my long-term position just because there's a potential downside. If we do get a downside, we do get to the 200 level, I'm definitely going to add a little bit more in the in Ethereum. So don't really see much of additional risk in this Ethereum. I would say if you're holding this for long term, don't sell. There's really not much point to sell at this point. Okay, I think that's it. That's all I want to talk about today. It seems the market right now just really indecisive, and we should just keep watching this market. But I expect the market is going to hit all-time high by mid of November after the election. Okay, that's all I want to talk about, and see you next time. Actually, I just want to add a few things to my observation here. One thing I noticed is that we have been, if you put this chart into a logarithmic chart, we are in this long-term growth channel, right? It's very obvious if you look at this. And we actually broke through that channel to the upside right now since June 2020. So this particular move, during the pandemic, we crashed in March, and then we bounced off. We had a huge rally, and this rally actually broke out of the channel by a huge margin. So right now, it looks like we have officially broken out to the top of the channel. But however, if you look at the NASDAQ from the 2000, from the dot-com bubble, before the breakout, there was a long-term channel, right? It was in a range, then it broke out. It had a crash in 1998. That was the Asia financial crisis. Huge shock to the economy. It was an economic shock, and Asia financial crisis. George Soros shorted the Thai baht. He was trying to attack the Hong Kong dollar as well, try to break that peg, but it failed. But you can see that there is quite a bit of similarities here, where we broke out to the upside, but then we consolidated, in a similar kind of trend, right? We broke out, was really a sharp kind of rally from the bottom in 1998, the end of Asia financial crisis. Then we went to the upside. And the reason is the market was really strong was because of the low interest rate. The Fed, the central banks around the world, they're reducing the interest rate because of the financial crisis, causing the financial crisis was deleveraging, right? In Asia, especially the Federal Reserve was lowering the interest rate and causing a huge rally in the market from the bottom. And this actually went on since October 1998 to January 1999. So let's take a look. So this was let me see. This was a much shorter rally than what we had right now, right? So this was only 105 days rally. What we have right now was actually much slower and smaller in magnitude. This was a 94% rally from the bottom. So even if I shrink it down, this is 80% rally in 98 days. And we're talking about here, we're talking about at the absolute bottom is only 80% rally. So let's go to the top. 86% rally, 147 days. So much slower and lower in magnitude. So after that, the market actually just consolidated at this top level, above the this particular line. If you look at this, so we should be expecting some sort of consolidation here, right? Then maybe by next year, April next year. Let me see. This went from February 1999, consolidated all the way to October 1999. So maybe we are going to consolidate here, September. Maybe until April next year. Or even further. We could go to March the year after. I don't know. So February 1999, October 1999. So this was less than a year consolidation. So we could be consolidating here. Just like the dot-com bubble, accumulating energy, then we do a final push to the upside. That is a massive amount of energy, like a dot-com, right? So it could happen. It could definitely happen, and that is something. I mean, possible if you have I remember the Federal Chairman Powell recently. He said that he's going to keep the interest rate low for the next 36 months, right? So interest rate at 0 for the next 36 months. That is 3 years. So that means a lot of money printing for the next 36 months. And we could definitely, not definitely, there's a very high chance we are going to have, this kind of blow up top in the NASDAQ index. It's totally a possibility. And that's what I want to add to this video. That's my observation, kind of long-term observation, multi-year observation. That's what I'm expecting the market might do if we keep the interest rate, keep the money cheap, right? Keep pumping money into the economy. And that is something we should watch out for. Okay, that's all I want to talk about, and see you next time.